Ever wondered if that spare change jingling in your digital wallet could actually turn into something more substantial? We're constantly bombarded with apps promising to make our money work for us, and Acorns is definitely one of the names that pops up frequently. But let's be real, beyond the sleek interface and the talk of micro-investing, how much can you actually make in a week with Acorns? That's the question we're diving deep into today. Forget the generic overviews and the vague promises. We're going to get down to brass tacks and explore the realistic potential of your weekly earnings with this popular platform. Now, before we get into specific numbers, it's crucial to understand what Acorns actually is. For those who might be new to the concept, Acorns is a micro-investing app that primarily works through the roundup feature. You link your debit and credit cards, and every purchase you make is rounded up to the nearest dollar. That spare change, those seemingly insignificant pennies and dimes, are then automatically invested into a diversified portfolio of exchange-traded funds, ETFs. Think of it like this: you buy a coffee for 950 Nigerian Nairas. Acorns rounds that up to 1,000 Nigerian Nairas, and that extra 50 Nigerian Nairas is swept into your investment account. It's designed to be effortless, a way to passively invest without even really noticing. Beyond roundups, Acorns also offers other ways to invest, such as recurring daily, weekly, or monthly contributions, and even the potential for bonus investments through their Found Money program when you shop with partner brands. They also have different subscription tiers, which come with varying features and fees. So, with all that in mind, let's circle back to our main question: how much can you really make in a week? The honest answer, and it might not be the exciting figure you were hoping for, is that it highly depends. There's no magic formula or guaranteed weekly return. Your earnings are intrinsically linked to several key factors. First and foremost, the amount you invest plays a significant role. If you're only rounding up a few transactions a week, say you make 10 purchases and each averages a 25 Nigerian Nairas round up, that's only 250 Nigerian Nairas being invested that week. Even with positive market movement, the returns on such a small amount in a single week are likely to be negligible, perhaps a few Naira at most, if anything at all. On the other hand, if you're actively contributing larger sums on a weekly basis, in addition to your roundups, your potential for earnings increases. For example, if you set up a recurring weekly investment of 5,000 Nigerian Nairas, then your total investment for the week would be significantly higher, and therefore, the potential returns, both positive and negative, would also be larger. Secondly, market performance is a massive and unpredictable factor. Acorns invests your money in ETFs, which are essentially baskets of stocks and bonds. The value of these ETFs fluctuates based on the overall health and performance of the market. In a booming market, your investments are likely to grow, potentially leading to noticeable gains even within a week. However, in a volatile or down market, the value of your investments could decrease, meaning you might actually see a negative return for the week. It's crucial to remember that investing always carries risk, and short-term market fluctuations are normal. Acorns is designed for long-term investing, allowing your small, consistent contributions to compound over time. Thinking about significant weekly gains is often unrealistic, especially with smaller investment amounts. Thirdly, the composition of your portfolio influences your potential returns. Acorns offers different portfolio options, ranging from conservative to aggressive, based on your risk tolerance and investment goals. More aggressive portfolios typically have a higher allocation to stocks, which have the potential for higher growth but also come with greater volatility. More conservative portfolios have a larger allocation to bonds, which are generally less volatile but tend to offer lower returns. Your chosen portfolio will impact the potential for weekly gains. Finally, fees can eat into your returns. Acorns charges a monthly subscription fee, which varies depending on the tier you choose. While these fees might seem small, they can have a more significant impact on the returns of smaller accounts. For instance, a 1,500 Nigerian Nairas monthly fee on an account with a small balance can negate any potential small weekly gains. It's important to factor in these fees when considering your net earnings. So, let's try to put some realistic numbers on the table. Imagine you consistently round up around 500 Nigerian nairas per week. Over a year, that's approximately 26,000 Nigerian nairas invested. In a single week, even with a positive market movement, you might see a return of a tiny fraction of that, perhaps 50 Nigerian nairas to 250 Nigerian nairas, if you're lucky and the market has a particularly good week. However, there will also be weeks where the market dips, and you might see a small loss. Now, let's consider someone who is also contributing an extra 2,500 Nigerian nairas per week. Their total weekly investment is now 3,000 Nigerian nairas. Over a year, they're investing around 156,000 Nigerian nairas. In a good week, they might see a return of several hundred naira, maybe even over 1,000 Nigerian nairas. But again, this is highly dependent on market conditions and their chosen portfolio. It's vital to shift your mindset away from expecting substantial weekly profits with Acorns, especially in the early stages and with smaller investment amounts. The true power of Acorns lies in its ability to foster consistent saving and investing habits over the long term. Those small, seemingly insignificant roundups and regular contributions can add up significantly over months and years, benefiting from the power of compounding. Compounding is essentially earning returns on your initial investment and on the accumulated interest or gains. As your balance grows, the potential for your earnings to grow exponentially also increases. This is where the real magic of long-term investing happens, not in chasing quick weekly wins. Think of Acorns as planting a seed. You're not going to see a fully grown tree in a week. It takes time, consistent watering, regular contributions, and the right environment, market conditions, for it to flourish and bear fruit, substantial returns. So, while the allure of quick profits is understandable, it's crucial to have realistic expectations when it comes to Acorns. It's not a get-rich-quick scheme. It's a tool for building wealth gradually through consistent, small investments. Instead of focusing on weekly earnings, a more useful metric to track with Acorns is your long-term growth and the consistency of your contributions. Are you regularly rounding up? Are you making consistent recurring investments? Over months and years, these habits are far more likely to lead to meaningful financial growth than trying to predict or chase small weekly gains. Furthermore, consider leveraging the other features Acorns offers, such as the Found Money program. Earning bonus investments by simply shopping with brands you already use can provide a nice boost to your overall returns over time. In conclusion, while it's tempting to want a specific answer to how much you can make in a week with Acorns, the reality is that it's a highly variable figure dependent on your investment amount, market performance, portfolio allocation, and the impact of fees. With that said, thanks for watching and until next time.